Today is a historic day in the world of cryptocurrencies and government history, since court documents have been made public that show a groundbreaking verdict. The U.S. Securities and Exchange Commission needs to pay XRP holders $100 billion in damages, according to a judge. This decision comes after years of lawsuits, arguments, and close examination of Ripple Labs and their main digital asset, XRP. For a long time, XRP investors didn't know what would happen next, and the market was unstable since the SEC was going after them so hard, which many people said was wrong or even evil. Now this decision not only clears Ripple of wrongdoing, but it also marks a major change in the way regulations work and sets a new standard for how digital assets are classified. To really understand how big this decision is, we need to go back to the beginning of the case. In December 2020, the SEC sued Ripple Labs, saying that XRP was offered as an unregistered security. This charge shook the crypto world to its core, causing major exchanges to remove coins off their lists and making investors scared. Ripple fought back hard, saying that XRP is a currency, a decentralized digital asset used for payments across borders, and therefore securities regulations shouldn't apply to it. Ripple's lawyers carefully pointed out flaws in the SEC's accusations, such as a lack of clear regulatory guidelines and even cases where materials seem to have been mismanaged or not given to the SEC. Not only was there a fight over XRP's classification, but there was also a bigger fight over how cryptocurrencies should be governed in the United States. Many people in the crypto world didn't like how the SEC handled things, but Ripple's strength and openness garnered it a lot of respect. People who spoke out said that the SEC's executives were corrupt and did wrong things in the Ripple case. These new facts make the agency's motivations and honesty look bad, which in the end changed the judge's mind. The recently released court documents show that the judge clearly rejects the SEC's actions. The judge says that the agency's prosecution against Ripple was not only wrong, but also meant to restrict innovation and safeguard old financial interests. The verdict says that a $100 billion restitution fund must be set up to pay back XRP investors who lost money because of the long legal ambiguity and market manipulation. The fund's rules say that investors will get 0.5 XRP for every dollar they lose during the lawsuit. This is meant to fairly restore wealth and trust in the asset. This decision means that the crypto world has never seen a bigger financial settlement than this one. It is much bigger than any previous settlements involving other projects or exchanges. More crucially, it makes it obvious to regulators and banks what they need to do. Overreaching and unfairly targeting new technologies will have bad effects. This verdict sets a precedent that will probably affect ongoing and future legal conflicts involving significant companies like Coinbase, Binance, and other cryptocurrency ventures that are being watched by the SEC. The fact that XRP is not a security is a big deal because it might change the rules to make them more favorable to innovation, openness, and fair market practices. From a market point of view, this decision is likely to cause one of the biggest price jumps in the history of cryptocurrencies. There are no more legal threats, and a huge compensation fund is putting money back into the XRP ecosystem. Thus, demand for XRP is projected to skyrocket. Institutional investors, who were hesitant because of unclear rules, are now expected to enter the market with a lot of force. As the digital financial world matures, hedge funds, asset managers, and regular investors will all see XRP as a safe, high upside asset. Analysts are already predicting fresh all-time highs for XRP thanks to solid fundamentals and more institutions using it. This clarity is great for Ripple's strategic plan, in addition to the short-term financial effects. The business can now work with banks, payment processors, and governments without the threat of lawsuits. Ripple's payment system, which uses XRP for liquidity and transactions across borders, is becoming more popular all across the world. A number of central banks have been testing digital currencies and looking into Ripple's technology as a base for their CBDC projects. Ripple's chances of becoming widely used and accepted go up a lot now that the SEC case is over. The XRP army, which is made up of dedicated investors, developers, and activists, deserves credit for their continuous support during the court battle. Even as the government cracked down and the market went down, this community kept loyal, raising awareness, backing legal defenses, and calling for openness. This decision is a huge win for them. It shows not just that the law is fair, but also that a group of well-informed investors can be powerful. This ruling will have a rippling effect that will give communities in the crypto sector the strength to stand up to regulatory overreach and keep pushing for new ideas. Ripple's founders have said they want to use this verdict to their advantage in the future. They want to grow their payment system, work with authorities all over the world, and speed up the release of new products. This includes improving their on-demand liquidity offering, which employs XRP to make cross-border transfers faster and cheaper. Ripple also wants to work more closely with central banks to help them with their digital currency projects. They see XRP as the backbone of liquidity for the future of money flow. The whole financial world is keeping a careful eye on everything. Major banks, hedge funds, and institutional investors have been secretly buying XRP, waiting for the regulatory certainty that has now come. Several companies, including JP Morgan, Goldman Sachs, and BlackRock, are said to be getting ready to buy a lot of XRP, which shows that they believe in the asset's long-term potential. This flood of institutional money might change XRP from a speculative token into a key digital asset that supports the next generation of financial infrastructure. XRP's possible significance as a hedge against inflation and currency devaluation is becoming more important in light of macroeconomic events. Digital assets like XRP provide an alternate store of value and payment method as central banks around the world deal with rising debt and economic instability. The court's decision makes the law less unclear, which makes XRP a good investment for the Treasury and for businesses to use. This verdict will definitely make lawmakers and agencies think about how they regulate cryptocurrencies again. People have said that the SEC's tough position is hard to understand and doesn't always make sense. The Ripple instance has shown that we need a more complex set of rules that protects investors while also encouraging new ideas. This decision could lead to changes in the law that make definitions and rules clearer, which would make it easier for blockchain and crypto innovation to thrive. It's also important to remember the new technologies that Ripple is still working on. Ripple is putting money into smart contracts and decentralized finance DeFi apps on its XRP ledger, in addition to payments. These new features will make XRP useful for more than just sending money. They will also make it useful for lending, tokenizing assets, and more. The legal win gives Ripple the freedom to come up with new ideas without the continual threat of government action, which will probably speed up their technical roadmap. This decision involves more than just getting their money back. For each XRP holder,